Stock sell-off on Wall Street on Friday as stronger than expected job report raises concerns of more cautious Federal Reserve. Asian markets also open largely lower, while the gift Nifty is suggesting a gap down start for the Indian markets. Crude prices and build on to the Friday's gains as the United States announced sweeping sanctions against the Russian oil industry, taking Brent to over $81 a barrel. Gold prices rise on uncertainty around incoming President Donald Trump's policies. India's industrial production growth significantly improves in November, growing at over 5% versus estimates of around 4% growth. CPI for December is expected to come in lower year over year and sequentially at 5.3% as food prices cool off. DMart posts a weak third quarter revenue grows over 17%, but margins contract and profits disappoint on increased discounting and operating expenses. Naveli Norona will also step down as the CEO, ending his 20-year stint at the company. Anshul Asawa, who is currently Unilever's country head for Thailand, is appointed as CEO designate. Hello, good morning. You've tuned in to CNBC TV 18. You're watching Power Breakfast, and I'm Vinny Motiwala in the Mumbai News Center. Thank you so much for tuning in this morning, but the Asia picture is not looking that pretty. We're seeing a gap down start coming in for the Indian markets. So look at the Taiwan index down 1.5%. Hang Seng is down 1.9%. Whether you look at Nikkei, which is the Japanese index, ASX 200, all of them are trading with cuts of more than 1%. Shanghai is down 0.4% as well. So nothing pretty coming in. US markets had seen a fall coming in on Friday. The reports that came in terms of US jobs, that's some concern coming in there, and that's why the Asian market is also down. Nifty implied open indicating a start in the red for the Indian markets, down 183 points. So yes, a subdued start, a dull Monday is what we're expecting coming in for the Indian markets. Nothing exciting happening there. But talking about US markets, the Wall Street, like I was talking about, that ended lower on Friday after a strong jobs report dampened the investors' expectations on further rate cuts that could happen by the Fed. Now, the Dow suffered the biggest loss, falling close to 700 points. S&P 500, that slipped as much as 1.54%, while the Nasdaq also declined 1.63%, which is actually pushing the key indices into the red for 2025. Now, for the week also, the indices posted back-to-back losses. S&P 500 and Dow Jones were sliding 1.9%. Talking about the tech-heavy Nasdaq, that was down almost 2.3%. Taking a look at the jobs data now, the US payroll grew by 256,000 in the month of December against Dow Jones estimate, which was only at 155,000. So the unemployment rate that was projected to remain unchanged at 4.2%, that slid to 4.1% in this month. Let's go across to Rick Santali, who is bringing us more updates on this front.
For the month of December on our jobs report, way hot. 256,000. Wow. What a shocker. 212,000 on last week's revised 227,000. But let's look at 2 weeks worth. If we get 2 weeks worth of revisions, we are looking at down 8,000, down 8,000. Now, 256, we have to see when that comps to. That would be the comp of March of last year when it was 310,000. Which means it would be the second best, basically going back to that point. Now, let's look at some of the important internals, shall we? Average hourly earnings up 0.3, up 0.3. We break that up 0.4. Up 0.4 was what we had been running. And if you look at the average hourly earnings year over year, we broke the 0.4. We're now down to 3.9, which in some ways may be good news. I'd like to see people make more wages, but we know that we've been feeding the beast with regard to income and higher prices. 3.9 equates to April of last year. To find a lower, you have to go all the way back to March, which I think is pretty interesting all in all. If we look at average hourly work week, 34.3 basically has been where it has been most of last year. If we look at the underemployment rate, or U6, 62.5, exactly as expected. I'm sorry. That was the labor force participation rate, 62.5, and it has been hovering at that level, Joe, 62.5. 62.6 was October of last year. Last year's complete high water mark was 62.7. The lowest of last year was 62.5, just to put a face on 62.5. And now the underemployment rate, known as U6, 7.5%. That is way down from 7.8, which became revised to 7.7. 7.5 would be the lowest going back to June of last year. So pretty decent news there.
Okay, and also we had some comments that came in from the former Federal Reserve Vice Chairman Roger Ferguson, who calls the strong job report a good news and says the Fed might be happy about the recent job prints. Listen in.
I think the Fed thinks about it exactly how you've been talking about it, which is good news. The labor market that they had feared was softening appears not to be. Challenging news, the anecdote, the thought that inflation is going to continue to come down, now is very much questioned. And I think, as I said the last time we were on, the probability of their getting off 2 cuts next year, or I'm sorry, this year, seems to be very, very remote at this stage. So, good news is good news, and good news is challenging news.
Okay, that was all the overnight and global market action that we saw coming in this morning. But how is all that going to be impacting our Indian markets? We have a research team joining in with us to tell you how the trade setup is looking like, which are the important stocks to watch out for in trade, what is going to be the F&O activity. Hormas, Vamakshi, as well as Sudarshanaya, good morning and thank you so much for joining in with us. Hormas, first up, starting with you. Qs doesn't seem to be too exciting, at least what we're seeing coming in from the US market or the Asian market open. What are we watching out for today?
Morning, Vinny, and it's very difficult to find something positive when everything around you is in the red. And despite the fact that we are opening gap down today, there are multiple negative triggers that we need to react to, and that includes the sell-off that we saw in the US markets on Friday, which we just spoke of, the dollar testing levels of 110, the crude oil prices rising to a 3 to 4 month high, Brent crossing 81, the Treasury yields nearing that mark of 5% in the US. So there are multiple negative triggers that the market has to react to, and we saw some glimpses of that in Friday's session itself because of the sell-off that we saw in the benchmark indices as well. The Nifty making a low of 23,344, and it is only courtesy the IT stocks led by TCS that there was some recovery from the lows of the day, and yet we have closed below the lows of 31st of December as well as last week. So there are some important levels that were broken on the benchmark indices. But while the Nifty did see some recovery, there was significant pain seen in the broader markets, with the mid-cap index and the small-cap index down anywhere between 6 to 7% last week, and 1/3 of the small-cap index, which is almost 33 stocks, ended 10% or lower last week. So there was some pain seen in the broader markets. The only positive, if you would like to call it that, is the November IIP number, which was significantly above estimates. But then, of course, that's a dated number, and how much weightage would the market would want to give that is only remains to be seen. There will be earnings reactions today. DMart, after the CEO transition, the earnings, the price target cuts that have come in as well. PCBL reported results, as did Just Dial. But now, after the key levels being broken, the lower levels come into play again for the Nifty and the Nifty Bank as well, because both of them have now significantly drifted away from their 200-day moving average. The November lows of the Nifty, which is 23,263, comes into play yet again. Then the Nifty Bank is already below the lows of the November lows, so that's another negative for the index. Among the key triggers, of course, inflation data comes out later this evening, and 9 Nifty companies report this week, which include the likes of Infosys, Reliance Industries, Axis Bank. So there is plenty to watch out for on the domestic side as well as on the global market front. But right now, we are opening gap down and plenty of negative triggers surround us.
Okay, a lot of negative triggers that we're watching out for, opening gap down. That's the cue looking like for the Indian markets. But yes, there are going to be some stocks that we are keeping an eye out on this morning. Vamakshi is here to give us that list of stocks. Good morning, Vamakshi.
Well, good morning, Vinny. Let me first start off with DMart. Revenue saw an uptick of 17.7%, coming in at 15,973 odd crores for the company, but the margins have contracted from 8.3% to 7.6% on a year-on-year basis. Just Dial's the margins have improved from 22.7% to 30.1%. Resultantly, net profit is seeing an uptick of almost 42.7%, coming in at 131 odd crores. PCBL's margins have contracted from 16.9% to 15.8%. Resultantly, the net profit is seeing a hit of almost 40% on a year-on-year basis. Ugro Capital reported its Q3 business update, while AUM saw an uptick of almost 32.2%, coming in at 11,050 crores. The gross loan origination was also up nearly 32.1%. Adani Wilmar will also be in focus because Adani Commodities, who is one of the promoters of the company, will be exercising oversubscription option of the OFS for 1.51% stake, and the floor price of the issue is expected to be at 275 rupees per share. Bharti Energies will be acquiring 100% stake Enel Green Power India from Enel Green Power Development for nearly 792 crores. Biocon is also on our radar because US FDA has classified Biocon biologic site in Malaysia as voluntary action indicated. Indian Overseas Bank has said that they've invited bids to sell nearly 46 NP accounts of 11,433.72 crores. Signature Global has bought 16 acres of land parcel in Haryana, and the land has an overall potential developable area of approximately 2.73 million square feet. Oberoi Realty also on our radar. That is because Slum Rehabilitation Authority has appointed the company as the developer of nearly 10,300 square meters of land in Bandra, and the company expects to be entitled to a free sale component of around 3.2 lakh square feet. Suntech Realty reported a pre-sales uptick of almost 40% in the third quarter. Collections, however, were down nearly 23.3%. And lastly, focus on Interact, and that is because they've received orders worth 221 crores in semiconductor and lithium-ion battery sector from Tata Projects.
Well, thank you so much for that, Vamakshi. Keep an eye out on all those stocks this morning. But finally, Sudarshan is also waiting by to tell us what's going to be happening in the world of FNO this morning. Good morning.
Morning, Vinny. So amid continued weakness, we saw sensex and nifty falling more than 2% last week, but major fall was seen in the broader markets, and mid-cap index had fallen more than 6%, the biggest fall in a week that we have seen in last 2 months. And for today also, GIFT Nifty is indicating a gap down start, currently it's down almost 200 points. Talking about the flows in the cash market, DIs continue to buy while FIs remain on the sell side. FIs have sold more than rupees 2,200 crore on Friday, while DIs have bought nearly rupees 4,000 crore. In the future side too, FIs continue to sell. On Friday, we saw FIs selling more than rupees 1,000 crore, and with this, they have added long contracts of just more than 500 contracts, and also they have had short contracts of more than 10,000. And with this FI's long exposure, only positive, if I can say, we remain on the oversold zone, and currently FI's long exposure now reduced to nearly 16%, while on the client side, it remains healthy and it's nearly 72%. Talking on the option side, 23,500 and 23,700 call have seen healthy additions of more than in the range of 26 lakh to 12 lakh shares. On the put side, 23,400 put has seen addition of more than 15 lakh shares, and 23,000 put has seen addition of more than 14 lakh shares. Now, with this, support for Nifty is now seen somewhere around 23,300. That is the key level, and resistance is now moved to 23,600. Lastly, stocks in focus. Keep an eye on the IT stocks, because over the next few days, majority of the IT companies will be reporting their Q3 earnings.
Okay, Sudarshan, thank you so much for that. Keep an eye out on those important FNOQs this morning. But on that note, we're going to step into a very short break. Up next, India's December inflation data will be released later today. We'll get you the key expectations on the other side. Welcome back. You're watching Power Breakfast on CNBC TV 18. Now, let's get to some macro cues. Now, India's industrial production that grew by 5.2% in the month of November compared to the expectation of 4.12% growth. November's IIP is significant improvement is what we saw compared to 2.5% growth that was recorded in November 2023 and 3.7% growth that was seen in October 2024. Now, let's move on. CPI inflation for the month of December will also be released later today. Lata is going to be joining in with us to give us the key expectations of this front. Good morning, Lata.
Good morning. The CNBC TV18 poll is throwing up a number of 5.3% as the inflation, CPI inflation for the month of December, which is high compared to the year ago December being 5.69. So, you're basically getting a 5.5 inflation over a 5.5 inflation. So that way it's not very good. December food CPI will continue to be the bugbear. 8.3% is what our poll is saying. Again, coming over a 9% in November and last year's 9.5%. As you can see, for a year in a row, it was already 9.5. It's rising at 8.3. So all these are not very good numbers. But the core CPI is expected to come at 3.73. It has been below 4 for at least about 15 months. And in November, it was 3.6%. Now, if the December CPI does come in at 5.3, then if you took the October, November, December number, it would come to about 5.7%, which is what the Reserve Bank forecast. Also, if it comes at 5.3, the month-on-month fall from November to December would be 0.5%, which would be seen as a very good number. Normally in winter months, vegetable prices fall and you get a 0.4% fall. A 0.5% fall, if it comes at 5.3, will be a very good number. But now let me come with a caveat. Even if it pleases by coming at 4.25 or 4.3, you should not expect any gung-ho reaction in the bond market. In fact, the market is now veering down to the view that whatever the CPI number, it may be difficult for any rate cut from the Reserve Bank given the very steep increase in US yields and the US dollar on Friday. So the CPI will be a sideshow today. Just a word on the IIP number, very good numbers. In the sense, from 5% per se is not very good, but, we have been lingering at 3.5, etc. So that way 5.2 is good, and it's certainly better than the CNBC TV18 poll. There were very good numbers coming in from power, from consumer goods, consumer non-durables, which is the informal sector. So all that is a good number, but even there, if you look at the April, November number, it is just 4.1. So overall, it's not a great show, but per se, November looks like a good IIP number.
Okay, Lata, thank you so much for that, for giving us the details in terms of expectation for CPI as well as IIP data. But on that note, we're going to slip into a very short break. From macro cues, we'll shift to cues from commodity after the short break, so don't go anywhere. Welcome back and thanks for staying tuned into Power Breakfast on CNBC TV18. Now let's move on and talk about what's happening in the world of commodities. And Manisha is joining in with us to tell us exactly what's happening there. Good morning, Manisha. Crude has jumped up to a 3-month high.
Well, it has, yes. We've put 3 weeks of constant gains for the crude oil prices, and previous week was a 6% gain for prices, and we've started Asia with 2% on the higher side right now. Well, what the markets really are reacting to is that on Friday, the U.S. has sanctioned Russia. The U.S. Department of Treasury has imposed sanctions on Russian oil producers like Gazprom and Sarkatneft, and then CEOs of 5, oil and gas companies as well. There are sanctions on more than 200 entities and individuals, 183 vessels that are shipping Russian oil, and there have been sanctions on Russian insurance companies as well. So the markets really are looking at on what the impact of this could be, because much of the Russian oil and gas comes to China and India. So how the Asian markets are going to react to this is going to be a bigger thing, because majority of demand growth in the world also is coming in from Asia. So that clearly has had the prices higher. This is a premium that we are looking on the higher side. This is what the Biden administration has done, and Trump is slated to come on 20th of January. So, well, yes, uncertainty is galore, and that is what is leading the prices higher.
Thank you so much for that, Manisha. But as we wrap up this edition of Power Breakfast on CNBC TV18, lakhs of devotees have gathered in Prayagraj to take a dip at the Sangam, marking the start of a 45-day Maha Kumbh, which is the world's largest religious gathering. Held after 12 years, millions of devotees are expected to take a holy dip on day one. The event will conclude on February 26th with over 400 million people expected to visit the Maha Kumbh.